Welcome to Standard Chartered TV. My name is Edwin, and with us today is Sandeep Bhandari, Regional Head of Global Markets, Northeast Asia for Standard Chartered Bank. A warm welcome, Sandeep.
Thank you, Edwin.
Today, a very interesting topic that's probably on a lot of people's mind. What the heck is going on with the Hong Kong market? How would you describe it? Where are the challenges? What are the opportunities?
I suppose three things. H1, we've seen a dramatic fall in GDP, negative GDP. Exports have probably collapsed. Imports have been equally challenging. Stock market, last year, off considerably. But at the end of H1, what are we looking at now? Stock market's up 40%. Signs of growth are coming back. We're seeing a slow increase in export demand. So, we've seen the eye of the crisis in 2008, and particularly in the last quarter, and globally markets collapsing in terms of stock markets, in terms of banks globally in bad debts, recapitalization, deleveraging. So Hong Kong aside, globally the world has gone in probably a unified recession, not seen any time in history. So this is a very different environment, and Hong Kong, is a country which is predominantly export-led. We export a lot of the goods and merchandise to Europe and the US. And these markets have effectively collapsed in terms of demand. So Hong Kong has felt that very strongly. But Hong Kong is very resilient. People in Hong Kong are very strong, despite what I would call, a very weak last year. And a first quarter, which was dramatic. The second quarter, we've seen a massive turn in equity markets globally. There's a sense that maybe we're over the worst of the crisis globally. Hong Kong cannot be looked in isolation. Hong Kong is not decoupled from the rest of the world. There's no such thing called decoupling.
And picking up on your earlier comment regarding the rebound in equity markets in Q2, certainly the world couldn't have changed that much. I mean, we still seem to be inundated with gloomy forecasts. How risky is the market today?
I think, well, first of all, there's a lot of cash sitting there in the world. As people have just sat out and saved money and to invest. So a little bit of that aspect. The second, Asia as a whole looks far more attractive than the West to invest in. Asia has growth. China looking at 5% plus growth. India at 5% plus. I don't think you can find any country in the West that can get above even 2% currently. So the Asia region remains attractive, and Hong Kong is a financial center. So it attracts a lot of capital. Second thing, stock markets, there's two views. They've perhaps overextended, and therefore we're going to see a correction. Now, I would say maybe 1,000 points off, but that's a big difference than 5,000 points. So I think one has to be cautious of the stock market. Invest probably slowly through a SIP or some sort of mutual fund. But I think the longer term, we're looking positive. The big uncertainty which exists out there is there a further crisis to happen? Is there more bad news to come? And that's the ambiguous area. So I think, cautious is the right approach. Hong Kong is starting to recover. Property prices are looking better. Equity markets are looking better. And, I've only been in Hong Kong 9 months, and I've had one observation from Hong Kong and other markets. We see a lot of TV screens around the city with stock prices. So it's like a barometer for public sentiment. If markets fall, public sentiment is negative. If market rises, it's positive. I think public confidence in Hong Kong is getting better.
Well, in that case, this question would be very important to public confidence. What do you think could be some of those dark clouds looking ahead? What could be that next crisis that you guys fear for?
I think that the issue is the banking sector. Okay, is there more bad news? Now, I suspect we're going to see more bad news from the global banks. But to what extent the market gets surprised by that? There's been US stress tests, UK stress tests, recapitalization, all these things. But in the back of that, there's a large amount of liquidity in the market. So I think, that's the uncertainty. Is it a false recovery taking place? The US unemployment figures remain mixed. Sentiment is still negative. If stock markets turn negative and sentiment becomes negative, this could put us down to another short-term spiral. But in my view, I think it's uncertain, but the worst is probably over.
Well, on a more positive note, I guess looking now slightly ahead, hopefully as the global economy does start to exit from this recession, how different will this recovery be from any of the other recoveries?
I suppose what's the first big difference globally? we have many countries around the world in recession. This is a global impact. Typically, previous recessions have been country-specific, regional, but not global. So I think this time we will see slow recovery. But I'll tell you something now. For those in Standard Chartered Bank, they can smile a little bit. Why? Because Africa, Middle East and Asia, these markets are growing. These markets, unlike previous challenges we've seen, the Asian crisis, recessions in the UK and Europe, Asia is leading the world out. Asia has strong savings rates. Foreign exchange reserves are very, very healthy for many of the governments. And particularly China and India, consumer demand there could well lead the world out in being the engines of growth for the West.
Thank you very much.
Thank you.